Hello, everybody. It's Tortoise Investing coming at you today with another 3 best dividend stocks to buy and hold forever. I released one of these yesterday. Today, we're going over 3 different stocks. So, as always, if you're new, hit that subscribe button. Make sure to hit the like button as well. That helps the channel tremendously, and I greatly appreciate everyone's support. And without further ado, we'll go ahead and jump into everything. None of this financial advice. Always do your own research. But yeah, today we're going to be taking a look at Lowe's, Genuine Parts Company, and Texas Roadhouse. So Lowe's is off of a recent high of 233 on September 7th. Currently down over 15% at 197 right now. So we have an adjusted free cash flow yield of 5.59%. We got a dividend yield of 2.25%. Payout ratio of 41%. All those are pretty good. Revenue has been growing at a rate of 7.18% over the last 5 years. The free cash flow has been increased at a rate of 11.39% over the last 5 years. Declining in recent years, though. But, they still got plenty on hand. There's nothing to worry about there. EPS has been increasing their rate right at 20% over the last 5 years. Crazy. They do have some debt at $32 billion. Their EBITDA is $12 billion, so no issues there. Usually I don't like a company to have 3 times their EBITDA or more in debt. It's usually like a bad financial sheet signal. The dividend's been increasing at a rate of, this is just nuts, 18% over the last 5 years, on average 20%, right at 20% over the last 10 years. Their last hike was a bit smaller, I think right at 5%, but a lot of companies have done smaller ones this year because inflation is just making it so hard on people to spend extra money dollars, and this and Lowe's have kind of like a monopoly on the home improvement world. Not a lot of houses and stuff are being sold right now. Like, it's crazy out there with the rates. Just absolutely nuts. Shares outstanding. This is the thing I love. Over the last 5 years, at a rate of 5.56% buying back shares. And over the last 2 years, over 8%. Look at this. They have went down from 750 million shares outstanding from 2021 to 631. That is 119 million shares bought back. And then some, because I'm sure they're still buying them back. That is just awesome. Love to see that in your companies. The return on capital employed, 2019 was 20, 26, 34, 48, 41, right at 42. This is great. A really high return on capital employed. Great company. It looks like it's going to be in our red day in the market. Next up, Genuine Parts Company off a recent high. Let's see. The recent high was February 23rd, right at 180. They are currently down 16.77%. Now, this has been increasing their dividend for over 50 years. Genuine Parts Company. It's been around for a while. Just free cash flow yield 3.25%, dividend yield 2.58%, payout ratio just a little bit over 43%, pretty good. Revenue has been increasing at a rate of 6% over the last 5 years. It's an old company, but it is still growing. The free cash flow rate of 11.3% over the last 5 years, very nice. EPS has been increasing at a rate of 14% over the last 5 years. They had the 2020 dip that a lot of companies had to deal with, but besides that, very nice up and to the right. Debt, they have $3.08 billion. Their EBITDA is right at $2 billion. Not an issue whatsoever. Beautiful balance sheet. Awesome. Just awesome. Dividend's been increasing at a rate of 5.7% over the last 5 years. They have been doing a little bit bigger hikes, it looks like. Right at 8% over the last 2 years. But yeah, just a nice little set of stairs. Strong compounding going on. Shares outstanding, if I could click it. Over the last 10 years, slowly but surely are trending downward. Not too much to write home about. And return on capital employed, pretty strong, 13.6 during COVID, 16, 2021, 18, and 2022. So trending in the right direction. Usually the market average for this is around 9 or 10. So pretty strong there as well. Next up, one of my favorites, Texas Roadhouse. I really like this company. This is going to look great. They are off of a recent high of 117 back in July. They are down 18.59%. That's got a lot to deal with that weight loss drug that's supposed to come out and make people feel fuller quicker. A lot of the food companies and stuff have seen a decline over the last month. Hershey's another one that's taken a hit. But let's take a look at this. Adjusted free cash flow yield 2.72%, dividend yield 2.29%, payout ratio 46.6%. Pretty good. Revenue 12.5% over the last 5 years, 12.2% over the last 10 years. Just up and to the right. Beautiful. Free cash flow 16% over the last 5 years, right at 16% over the last 10 years. Again, just up and to the right. EPS, same story, 16.6% growth over the last 5 years. The 2020 dip, of course. Most things have it. Debt, they have more cash than debt. I love that. If I can find that in a company and it catches my eye enough, I'm gonna grab some. I'm gonna grab some of it. But yeah, this is just phenomenal. The dividend's been increased at a rate of 16% plus over the last 10 years. This is just nuts to me. Shares outstanding, they don't do too much, but here lately they have. I'm assuming last year during 2022, they did dip down into the 70s, low 80s area. So I'm assuming that they probably gobbled up some of those shares, but over last year, down 3%. Pretty nice. And return on capital employed, again, the 2020 dip. It's just been taken off since then. You got 13.5 in 2019. 2020, it was just 1.3. And then 15.56 2021 and 17 2022. And I'm just going to assume this is going to keep growing because this company is so good. But yeah, 3 strong compound and dividend stocks that you can buy and hold forever. I like all of these. Again, do your own research and stuff before buying anything. But yeah, hit that subscribe button. Drop a like if you haven't. And until next time, see yous.